All right, let's get to business. It's a new week, another day without trade. Sound, mate. Unfortunately, the trade that I did have lined up, I didn't take because it wasn't my model today. Would have been a belter. And yeah, but we're just going to analyze and see what went on. So, zoom out a little bit here. This is the Nasdaq. We had 15, well, it was a 30-minute inverse actually. We'll just look at this first on the S&P. So S&P was where I was looking today. We had this 15-minute inverse fair value gap after the previous daily high. It was traded above and broke down. And then, I was looking for the model to form. Maybe if it came down a bit lower here, maybe a fair value gap like around this sort of area, which we didn't get. Price traded back up and then came back down, coming past 830 here, so we manipulated down. And yep, so the model didn't form here. But what I was looking at is, we've got, what chart was it on? Yeah, so we've got this 30-minute fair value gap here. And that was within, what time is that? 8:30, 8:35, around that time. So from that, price traded up here, just tapped it, like wicked it, and I was thinking, that's probably the move down. I had initially drawn this out a little bit higher, and I didn't spot it at the time. It was only after the initial push down, like around here, that I realized this was a 30-minute fair value gap. Price had tapped that, and that's why I lined up this short stop loss just above that candle. As on the 15-minute, that would be fine. And I was thinking maybe we trade back up and then go in to go short, but it's not the model. It's not really what I'm looking for, even though technically we've got the inverse fair value gap, trade back up, down, got the fair value gap here, but wasn't how I wanted it to form. I was thinking shorter term, target the London low. So that would have been a 3.37 risk to reward. Bit of a bummer, because I was if I was to take this, I would have put like 3% on it. As you can see, stop loss would have been perfect. Price does come down, and the first move didn't quite take the London low, but I think it was on the 1 minute that I was looking at. So this second position that I've got lined up on the right here, I was looking around, was it 3 minute? I think it was a 3 minute. For potential move back up. You see this break here, and then the fair value gap in here, price traded back down into this just here. We'll draw that out just for confirmation there. So that's the fair value gap, and I was thinking this move here could possibly play out to take previous daily high and also the London highs, which it has done now. So that's one of the reasons I didn't get in. I initially had this over the top of this position, just lining up, and yeah, that's what stopped me from going short. But if I did go short today, I was going to do 3% risk, so I think that was 81 units. As you can see, 187 quid stop loss for £631 profit, and a flipping faggot, mate. Do you know what I mean? Would have been nice, but we didn't get it because it wasn't comfortable. We also had no news, no red folder at least today. I think there was like 3 pieces of news and a Japanese bank holiday. So, yeah, I was just thinking it's probably going to be quite choppy. As you can see, it's a bit choppy here. On the 1 minute, it was looking a bit like up, down, up, down, up, down, like that. Wasn't really sure where it was going to go, and I remember sitting there at the time at my desk being, I said to myself, the fact I'm not sure where it's going to go is a telltale sign that I'm not going to get in here, because if I'm risking, £187 for a stop loss, I want to make sure that I'm sure. So ultimately, it's not a bad thing, and it wasn't part of the model, so can't be mad about it. It's just a bit of a bummer. You know what I mean? So following the move, if I can say my words correct, oh yeah, another confluence that I was looking at for that move up was the fact that we just hit 10 o'clock as this formed, and I was thinking that could be a 10 o'clock reversal, but apparently not. So if we look at the London low actually being swept, when it gets swept, it got swept on the 10:45 candle, and then a final push down at 11 before the move up. So yeah, as you can see, price has just sort of ripped up since then across the lunch hour, take everyone out. And yep, so I think tomorrow we've got CPI, and then Thursday we've got PPI and unemployment claims, and then Friday there's like news at 8:30 New York and news at 10 o'clock New York. So I probably will just leave Friday out, just because I don't really like days where you've got two different news drivers at different times. It's a bit more unpredictable, and also it being Friday is just not ideal. But ultimately, I had both directions correct in hindsight. It's always easier to say in hindsight, but when you're actually about to put money on the line for it, it's a bit more difficult to make the decision. I would have liked to see my model play out here. We get the fair value gap form here to then target previous daily low, but when you look at the daily chart, zoom in a bit here. Is it likely that on a Monday we're going to go and take out the Friday low? Not sure, mate. Do you know what I mean? Bit less likely, hence the reason for the what's it called, the lower time frame target being the London low. And if we look at the 4-hour candle as well that formed around that time, this is the 6-hour candle to 10 o'clock. So this is 10 o'clock candle. This then sweeps the previous 4-hour and then has gone up to take the other side of that to sweep that. So yeah, ultimately made the right decision to stick with the model, follow suit, but missed out on about 630 quid. So whether I would have actually ended up holding the trade if I got in initially, or if theoretically or hypothetically I got in here on this first tap and I was actually watching it and I clocked this 30-minute fair value gap, would I have held that all the way down, back up just below the stop loss, and then down again? Probably not. I probably would have taken, if we set the limit, I think it ran about 530 quid in profit or something at first. So that's 630 there. So if we closed at like around here, yeah, like around £500, I probably would have got out like here, and just called it a day, called it a week even, because that would have been banging. But you learn. And yeah, looking forward to see what the market brings us going forward. And I think ultimately we just have to be patient, wait for the setups to form. So with that being said, I'll be back tomorrow with some further info and analysis, mate. Have a good one.